Hello and welcome to Moneylife News and Views. I'm Debashis Basu. This week I'm going to talk about value creators. It's out of a study that we do every year which takes the past, that's previous 10 years data, and looks at companies which have created the maximum value. Now, equity, as we know, is fantastic for long-term value creation, for wealth creation, if they can be selected properly. Well, when banks pay you 6 to 7% per annum as interest, some stocks can go up 100% or more in a year. Over 10 years, they can go up a lot. And that, is really a lot. Now, here is some data for the past 10 years, that is 2013 to 2022. That is a 10-year period that I'm talking about. Now, after applying for certain filters such as liquidity, trading frequency, etc., here are the top 10 value creators or wealth creators of the past 10 years. These are a company called Tanla Platforms now, Poshak, Shivalik Bimetals, Vidhi Specialty Food Ingredients, many of them. As an average investor, if you're not paying attention to the market, you may not have even heard of some of these companies. Alkylamines, KEI Industries, HLE Glass Coat, Finiotex Chemicals, Tata Elxsi, and Minda. Now, how well have these companies done? It's quite startling how much these stocks have gone up. From an adjusted price of just 5 rupees or 5 rupees 12 paise to be accurate, sometime in late 2013, the company called Tanla Platforms has gone up to 946 rupees. I'm not talking of the peak, I'm not talking of the bottom. I'm talking of an average price over 2022. 946 rupees from just over 5 rupees over 10 years, which is a stupendous rise of 189 times in 10 years, right? 189 times. It's not 189%, it's 189 times. Poshak went up 130 times. A small company based out of Baroda, listed only in Bombay Stock Exchange. Shivalik Bimetals was up 126 times over the past 10 years. Now, what causes some of these stocks to go up in this fashion when many stocks, many large companies, well-known companies, many well-run companies cannot even deliver a double-digit return over a year? Now, as I said, we've been doing this annual compilation for the past 16 years, 10-year study over 16 years. And here are our observations. This applies to this year, but it's the same story every year, year after year. For every 10 years, it's the same story. Number one is starting valuations. This is the single most important factor. All stocks that have created enormous shareholder value were available at an exceptionally low price and an exceptionally low valuation, not low price, exceptionally low valuations. In 2013, that's our 10-year period, first year of a 10-year period, because the stock market was in doldrums. That was part of the reason. But look at the valuations. KEI Industries was valued at a throwaway price earnings ratio of 4. Poshak's valuation was 2.8. The PE of Alkylamines was 6. Vidhi Specialties was valued at a PE of 3. And Finiotex Chemicals at a PE of 4. A very, very low valuation is the springboard for exceptional value creation. It doesn't mean that a low valued stock will necessarily create a lot of value, will go up a lot, but those who have gone up a lot tend to start at a very, very low valuation. So if you're looking for stocks to go up a lot in the long run, you have to find them among stocks which are valued very cheaply now. Factor number 2, a burst of profit. All these companies had broken into a sudden sprint at some stage, a sprint of profitability. That was the time to latch on to them. Shivalik Bimetals, Shivalik's net profit, which was just between 7 to 9 crore a year for 4 years between 2017 and 2020, suddenly jumped to 19 crores in 21 and 26 crores next year. Net profit of Finiotex Chemicals first jumped to 16 crore in 2015 to 28 crore in 2016, that's in 1 year, 15 to 16, profit jumped from 16 to 28 crore, and then continued to rise steadily every year until March 21. After this, its profit jumped 20%, and the following year by 75%, putting it among the top gainers on the back of these 2 years of exceptional profit growth. Look at a company like Alkyl Amines, an R&D focused specialty chemicals manufacturer. It reported a net profit of between 85 to 95 crores for 4 years. Similar kind of profit, no tremendous burst of profit growth that we're looking at. That is between 2014 and 2017. What happened the next year, that is 2018, the profit shot up from around 90 crore to 118 crore. But this was nothing compared to what was to follow. It jumps 39% next year, and 56% the following year, and 67% the year after. So this is the kind of profit jump you would be looking at. The first factor was low valuation. On top of that, if you have such profit jump, that's really remarkable. The stock naturally skyrocketed. Minda, one of the top 10 value creators, it's an auto ancillary company, reported a stunning 34% compounded annual growth in net profit over 10 years. KEI Industries, which we now see as they advertise quite a bit, it makes mundane products like electrical cables and wires. They reported a 10-year CAGR of 31% in net profit. And what did it do to shareholder value? It led to a 57% CAGR over the same 10-year period. For mind-boggling gains, we must look at such massive and mind-boggling jump in profits. Factor number 3, small size. All these companies were small in 2013, except maybe Tata Elixir, which is a medium-sized company. Tanla's turnover was just 117 crore in 2013. Last year, that same company reported a turnover of 3,200 crore. That's almost 20 times, or maybe 25 times. Poshak's turnover was just 51 crore a decade ago. Shivalik Biometals had a turnover of that was even smaller, just about 30 crore. If you are looking for multi-baggers, look for smaller companies. They will not be followed by analysts. They will not be in the buy list of the fund managers because of low liquidity. Large companies, those that are talked about in the media and tracked in social media and where there are analyst research reports, etc., they're already discovered. They will not give you extraordinary gains. Point number 4, hot themes. This factor is not necessary, but if it's present, it definitely helps in inflating valuation. Shivalik Biometals, take the case of Shivalik Biometals. It's a good company, but the return on investment of their investment is not extraordinary. It's just starting to get better, but it's still not extraordinary. But being part of a hot sector or hot sectors, I would say, an investment theme or a meme definitely helped increase its valuation enormously. There are multiple themes in case of Shivalik. It is utilizing PLI, that is the performance linked incentive scheme of the government of India, to expand into electrical vehicle products, charging stations, intelligent battery systems, and solar energy farms with battery storage. So now 3 major hot themes present in one stock: PLI, EV, and green energy. These are all hot themes and they were all in one single stock. So people piled on. Tanla, which is into messaging, that is SMS messaging, e-commerce, e-payments, rode the wave of market's interest in technology companies or themes of distributed ledger that backs Bitcoin, and communications as a platform, as a concept, as a theme in 2021. Now, with the benefit of hindsight, all this stuff that I'm saying is by looking at something that has already happened. So there is a hindsight bias over here, but that's the only way we can start to even understand what creates multi-baggers. But with the benefit of hindsight, all these are great lessons, especially the combination of low valuation and high profit, but finding and profiting from these situations is really, really very difficult. It's very easy to look back and say, oh, if only you had bought this stock at this time, see how it would have grown. But that's not how it works in real life. For one, stock prices are influenced both by external as well as internal factors. For instance, multi-baggers often fall sharply due to external events. So at that time, if you're holding the stock, you'll be very doubtful whether the stock is ever going to come back again, and you may be panicked into selling it off. Staying the course is tough, even if you know the course over the next 10 years. Now that brings us to point number 2. Vastly improved business performance looks obvious with the benefit of hindsight, but only is revealed over time. Even the managements of these companies are often not sure how the future would unfold. The best course of action for investors then is to look for a combination of improved financial results combined with reasonably low valuation, and hope that these two factors put together, added to a little bit of hot themes or memes or whatever, will take the stock much higher, and they would be able to ride that journey of extraordinary value creation. That's all from me this week. If you enjoyed it, if you liked it, please share and please do subscribe. Thanks for watching.